The ASX tumbles amid global recession fears. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of Heise Says. Still working through my stein of coffee, and I thought we would have a look at this article about the ASX tumbling significantly over fears of a global recession. Now, before we go through this article, we are going to jump to one of my favorite websites and just have a look at some headlines. Okay? And we've got to remember, a few days ago I did another video, or probably even yesterday, about housing prices shooting up, planning to shoot up. It's a recovery, everything's going gangbusters, get in quick. Get in quick, where the media was essentially, I would argue, trying to manipulate first home buyers using techniques and tactics of persuasion that they were running out of time, putting time bars on things, fear of missing out. And now, a day later or 2 days later, we have the ASX tumbling and more talk of a global recession. Now, this would not be a surprise to anyone here if you've been watching and following the things that I've been talking about. But if you think this is important, please share this content, share the channel, the videos I produce with your friends and family, just so, well, so they can hear a contrarian opinion to what they're getting fed in the news, and maybe look at a few other sources of information to kind of piece things together. Because not everyone is can be as a cynical bastard as I am, or maybe you all are. Maybe all of your business owners, you work for a few years running a business and then you get grey hairs. At least that's what I saw in friends from university, particularly all the insane lefties, the full-on lefties. Oh, we're going to do everything and, work together community, and then they run their own business. They become grey, bitter bastards like me real quick. So that's kind of satisfying, but off topic. So let's have a look here. This is Trading Economics, and it is just a great website for news about economics, frankly, and global economics. And let's have a look at some of the titles here. So US service sectors grow at 3-year low. So the service sector is growing at a 3-year low. Their stocks rebounded on a rate cut expectation. Okay, now when you have a rate cut, that's a sign that the economy isn't doing well. So they're rebounding on that. Now, the market at the moment, it seems like it's very emotionally driven and very sensitive to even slight changes. Even a tweet can change the whole market. UK shares fall. Gold trades above 1,500. Gold and silver, they're traditionally, frankly, they're real value. People will store their assets in gold and silver when they're worried about what's going to happen, when they want to protect their wealth. US factory orders fall less than expected. Okay, so they've changed that data by 0.1%. So they thought it was bad, but it's really bad. But then again, we just looked at the PMI the other day, where they've fallen to the lowest levels in 10 years. And US jobless claims rise for the third week. So their unemployment is going up. Even in Argentinian industrial production is going down. Uruguay inflation rate is going up. I mean, okay, they're not the best examples of economies, but you can see that there are global issues that are really the US is going to affect. And it's going to have an impact on Australia, and it's going to have an impact on China. So with that in mind, just some of those other headlines that we've seen there, and we've seen coming for the last few days, let's have a look at what we're reading here. And it just makes me question everything else that is being spun. Everyone who's telling me, oh, the real estate's going up, but why is it going up here in Australia? Is it because the economy is going gangbusters, or is it because our cash rate is at insanely low levels? It's artificially making it cheap to get access to money. So let's have a look. ASX tumbles 74 billion in 2 days over global recession fears. So, guys, let me know in the comments. Are you concerned that there's a global recession? Do you think? Well, actually, no. Do you think it's possible at this stage to do anything to avoid a global recession? That's the question. Can you think of any way that's possible to avoid a global recession? So, Australian shares have closed sharply lower, posting their worst fall since August, due to rising fears of a global recession. ASX 200 dropped 2.2% to end at 6,493 points on Thursday, a slight recovery compared to early trading losses. It has, however, plunged by 3.7% in 2 days following Wednesday's losses. In dollar terms, the local share market lost around 74 billion in value over 2 trading sessions. Investor sentiment has also dipped across the Asia Pacific, with Tokyo down, Hong Kong, and experiencing moderate to heavy losses. The Australian dollar is buying 67.1 US cents, and I'm just looking over here, 67.4 now since the article was written a few hours ago. Oh, it's skyrocketing, guys. Skyrocketing. We're mapping out a very similar pattern to October last year. Sharp fall, slow rise, sharp fall, slow rise. Stockbroker and author of Marcus Today newsletter, Marcus Padley, said. The evidence for our deepest fears, global recession, has been building over the past few weeks, and that kicked up again with the US ISM manufacturing numbers and then some more poor private sector employment data on Wednesday night. I wouldn't be making any brave calls until we see the key US job figures on Friday, and I doubt they're going to be much help to us. Well, yes. Best and worst performers. Each sector posted heavy losses, with energy negative 2.2%, materials negative 2.7%, telcos negative 2.5% being the weakest performers. The major banks, Com, Westpac, ANZ, and NAB were among the biggest drags on the market, losing between 2.4% and 3.5% each. Shares in mining giants BHP, Rio, and Fortescue dropped between 3.2% and 4.2% each in one day, or 2 days. Energy companies were also hit hard, with Origin Energy, Santos, Woodside Petroleum down between 2.9% and 4.1%. Mr. Padley said it was little surprise energy and the miners were among the hardest hit, because they are the most heavily exposed to sentiment about the global economy. Apart from gold, there we go. Apart from gold, the least worst were utilities, which are seen as defensive and can achieve moderate regulated earnings even in recession, and also benefit from falling interest rates, he said. 15 companies on the ASX 200, with gold miners among the list, climbed higher amid sea of red. So actually this is interesting. I've got another video, because by the time you're watching this, I'm actually on the way to a camping trip. So I've pre-recorded a few for the long weekend, guys. I've got another one about gold and the prospects of it potentially saving the Australian economy or offsetting some of the export losses in our, Banana Republic iron ore country. So North Star Resources, Sarine Mineral Holdings, I know I buggered that, and Newcrest Minerals were the best performing stocks. The safe haven demand for gold surged amid concerns of a global economic downturn. So guys, if you're stackers, have you found there's shortage of supplies from your local dealer? I remember when I was buying some silver a couple of months ago, they'd run out of 1 kilo bars. Or maybe they're just telling me that. Spot gold prices have lifted 1.4% to 15,000. We wish. 1,500 US an ounce. On the flip side, Nearmap down 5.5 and Austral 5.1 posted some of the steepest losses. I didn't even know Nearmap was listed. I didn't even know they weren't listed. There you go. That's why they're charging so much for everything. While the ASX 200 is now down 5% from its record close at the end of June, it has still managed to put on 15% since the start of the year, as it emerged out of December's sharp correction. So mounting worldwide risks. The local market's weak performance follows a heavy sell-off that occurred across foreign markets overnight. London's FTSE was the worst performer, dropping 3.2% in one session. On Wall Street, the Dow Jones Index shed 838 points, or 3.1% in the past couple of days. The plunge was triggered by the United States recording its worst manufacturing figures in more than 10 years and worse than expected private job figures. So I'm putting a timestamp here. I have discussed this if you haven't seen it. It appears the ongoing US-China trade wars is starting to hurt America's economy, which has begun to show signs of faltering. According to trade concerns, the US will impose $7.5 billion worth of tariff on European Union imports in 2 weeks. This is after the World Trade Organization ruled that the EU had been granting illegal subsidies to Airbus to give it an unfair competitive advantage over Boeing. Well, I wonder if the WTO would look at China with a similar lens. Investors also reacted poorly to pessimistic data from the European Union, revealing that factory activity had contracted to a 7-year low. Well, there you are. I mean, that's the thing. There's a lot of well, shaken confidence, I would say, on a global perspective. Everything is lining up to troubled times ahead, and a recession is coming. I think Australia is very badly positioned to deal with any of this. And, you know, I'll bring up one of my favorite websites, the Observatory of Economic Complexity. From that, you can get an understanding of what other nations Australia is exposed to with regards to our exports and our imports. And essentially, it's China for both. Most of our imports come from China, and most of our exports come from China. So we are very heavily dependent on their economy, and they are very much linked to the United States. And the United States, as we're seeing here, is starting to report worse and worse signs. So yeah, you know, definitely makes me question people who are saying that good times are coming for Australia. I mean, real estate cannot continue to go up in Australia if we have a recession. I don't see how it can, unless we have foreign money flooding in. And our foreign investment into housing in Australia, I mean, it's tanked, guys. I'll just bring up this chart to show you. You can see here the black line is percentage of housing approvals that were foreign investment. You know, look at that. Look at that dive. It's nuts. Anyway, guys, like, share, and subscribe. If you enjoy the content I do and you want to help me produce more, I have a subscribe star and a Patreon down below, and I really appreciate all your help. And even if you can't afford to do that, but you put up with my ads, thank you very much. I appreciate it. Guys, I'm going to drive now, pack up the car, and go for a 4-hour trip on a camping trip with the family. So, you know, you'll get a few pre-recorded stuff over the next few days. And I may try and share some images of what it's like out west at the moment with the drought. I'll let you know through the community channel of the YouTube if you're interested. Anyway, guys, I'll talk to you all later. Have a great day.